So we have Jump Limited summarized statement of P&L for the 3-month period ended 31st March 2015 is as follows. What do we need to think about, please?
So it's 3 months.
3 months, correct. So you'd be apportioning things like annual investment allowance, writing down allowance, agreed?
Yeah.
And it's a limited company. Very important to understand and comprehend. It's a limited company. Just tell me some differences between limited companies when it comes to taxation and individuals and partners within a partnership, please.
So if I'm working out capital allowances, I would allow everything as write down allowance. There's no personal use.
Private use, good, excellent. Yep.
Oh, sorry, and everything will be taxed at 19%.
Correct, good, everything at 19%. What can you tell me about annual exemption?
Annual exemption
for the company?
What, in terms of gain?
Correct, yes. So what I would say for chargeable gains for companies is that it'll be at 19% fixed. We don't have the whole 18, 28, 10, 20. It'll be a fixed at 19%, and no annual exemption is available. However, indexation is available. Indexation up to December 2017. That's what we'd need to consider. So basically, these are all thoughts that are coming in my head as soon as I see limited company. What else am I thinking? As you correctly mentioned, no private use adjustment. Why? Because the company is a separate legal entity. The company, for example, cannot drive a car. It's the director that made to drive a car, and therefore you have benefits in kind, taxable benefits.
Yeah.
I'm also thinking when we're looking at companies, we're thinking about qualifying charitable donations. So add back for tax-adjusted trading profit, but then an allowable deduction is available if there are sufficient profits to deduct from qualifying charitable donations. And we'll probably come across 1-2 more things, but that's generally my thoughts when I see limited company. Yeah, so let's continue. Let's look at the figures, and what are your thoughts, please?
Okay, so it starts off
Yep, revenue.
Yeah, revenue is 264,900, and then they have deducted. Have they deducted all these numbers or added it?
No, as in they've added it there to get 409,600.
Yeah.
But then they've ultimately taken it off, right? So you have revenue less the total of these items.
Okay, yeah.
Okay. Loss.
Yeah. So in terms of this, you'd have to add back the depreciation. And then employee cost.
Yeah, the rest of them we'll need to look at the notes.
Yeah.
Good. So we have a loss basically. Our starting point is loss before taxation, and so far we're adding back 8,100. Keep in mind 3-month period, very important. 3-month period. Just 1-2 more questions. Ended 31st March 2015. I'm going to say 3-month period ended 31st March 2020.
Yeah.
When is the CT600 due, the filing? If it's 31st March 2020?
It would be hold on, it will be 31st Jan 2022.
Nope. This is another difference with individuals and companies. Companies are not under the self-assessment regime.
Yeah.
So 31st Jan is completely irrelevant for companies. Companies need to file within 12 months from the end of the accounting period. So they would need to file, if it's 3-month period ended 31st March 2020, they would need to file the CT600 by 31st March 2021.
Okay.
And when will the payment be due? The corporation tax payment? It'll be 9 months, 1 day after. So it'll be 1st of Jan 2021.
Okay.
Keep these things in mind, very important that you don't get confused or mix the two up.
Yeah.
And also, obviously, you always need to consider when you see limited again, a company, whether quarterly installment payments are relevant or not. And they will tell you that there's some subsidiaries, and then you'd reduce proportionally reduce the 1.5 million limit. You're happy with that understanding behind that, right?
Yeah.
Okay, so what do we have? Employee costs.
Employee costs. You have employee training courses, 3,400, which I think is allowable.
Good.
Employee pension contributions paid, is allowable. Cost of annual staff party for 8 employees. What's it? 8. I think that's disallowable because it should be £50 per employee.
No, £50 is trivial benefit for the annual staff party. It'd be 150.
150. Okay. Or otherwise, everything is disallowable, right? It's not the excess.
It's not
okay.
Excess, but that's the rule that you just need to remember. That's good.
Yeah. So I think here I will add it back because this comes to 187 per person.
Okay. Good.
And the balance of expenditure, all of it. Okay, yeah. So you can just take that off 173,200. It's fine.
Good. I just wanted to comment on the employee pension contributions paid. Paid is a very important word. Pension contributions on a paid basis. So any accruals for pension contributions are disallowed and deducted for when they are actually paid.
Paid. Okay.
Lease of a motor car, please.
Lease of a car, 189. Grams. 1 sec. Are there any numbers to it?
Yeah, so you've got 1,200 here.
1,200.
No, 1,200. We have 189 grams per kilometer. Any thoughts?
I'm not sure.
It's a high emission car, meaning it's 189 grams per kilometer, exceeds 110. Therefore, only 85% is allowable. So you'll add back 15%. 1,200 times 15% is an add back.
How did you get the 15%?
That's just a rule of thumb. If it's a high emission car, 15% is disallowable. You need to remember that and memorize that.
Okay, so that's not given to me in the tax rate tables.
No, that's something you need to literally just know that if it's a high emission car exceeding 110 and it's leased, then only 85% of this 1,200 is allowable. Therefore, we'll add back, because they've deducted this, so we'll add back 15% of it.
Okay. Professional fees, legal fees in connection with the issue of share capital. Check out. I would say that's allowable.
Allowable? Share capital. Share capital is nothing to do with trade.
Okay.
So therefore disallowable.
Okay. Sorry, I missed the first one. Accountancy is allowable that you can deduct that
Yeah. Why? Because it's
because it's
related
wholly
to
and exclusively to.
exactly. You wouldn't pay for accountancy if you didn't have the trade.
Mhm. So you said issue of capital is nothing to do with trade. So
No, it's more to do with the company as a whole, but it's not directly to do with the trade of the company. It's more to do with the sort of outside of the. It's outside. It's not directly related to the trading activities of the company. And share capital is capital in nature anyway, so therefore disallowable.
Okay. Legal fees in connection with renewal of a 20-year property lease. I think that's allowable because
Correct.
it's a
Why?
renewal.
Excellent. Short lease renewal is allowable.
Yeah.
Good.
Other expenses, entertaining UK customers is disallowable. Entertain overseas customers is allowable.
Good. Yeah.
Political donations is disallowable.
Agreed.
Balancing on, oh, okay, the rest you can take off.
The political donations is nothing to do with trade. It's not wholly and exclusively for trade purposes.
Yeah.
Therefore, as you say, disallowable. I think entertaining overseas customers is also disallowable. It's only allowable when it comes for VAT. Purposes. Yeah. Keep that one in mind.
Okay.
Let me just double check. So keep going. Let's look at the further information, but I'm just going to double check that one.
Okay.
Yeah, plant and machinery.
On 1st of December, written down value. So main pools 12,100, special rate pools 5,700. The following cars were sold during the 3-month period. So the following cars were sold during the 3-month period. Car 1, proceeds 9,700, original cost 9,600. The original cost of motor car 1 was added to the special rate pool when it was purchased, and the original cost of motor car 2 was added to the main pool when it's purchased.
So one is special rate, one is, so these are sold. So we have disposals, right? We'll be taking out figures.
Yeah.
Motor car 1 you'll take out from special rate pool, and motor car 2 you'll take out from the main pool.
Mm-hmm.
Now, what are your thoughts?
My thought is that motor car 1, you're getting back more than the original cost.
Exactly. So capital allowances are restricted to cost, original cost.
Okay.
So your disposal proceeds will be the 9,300.
Okay. So yeah, the proceeds I'll put into the calculation is 9,300. And for the other one it'll be 6,100, and then I'll probably that's it. And then I'll just do the normal calculation to work out, because it's not ceasing to trade or anything, so I don't need to. I'll just do the normal 18% and 6%.
After you take these items out, right? And you'll be taking out, as we say, the 9,300 and the 6,100.
Yeah.
You can't take out more capital allowances than what's originally been brought into the computation, which is the 9,300. Okay, and the excess obviously is a cost, so there's no capital gains tax exempt. But if it was another item, there would have potentially been capital gains tax on the difference.
Yeah. Okay. Good. Previous results. Jump Limited's results for its 2 previous periods of trading are as follows. Year ended 31st May 2014 and period ended 31st December 2014. They made a profit of 78,600 and 42,400. Bank interest receivable 1,200 and 0.
So they've given these figures for the previous years.
Yeah.
Periods. Why? Because we have a loss. We'll most likely have a loss. Okay.
Yeah.
So I can already sense, I haven't looked at the questions, but I can sense that they'll be talking about loss relief and how we can relieve our losses.
Okay.
Okay.
Group companies. Jump Limited owns 80% of the ordinary share capital of Hop Limited, 60% of ordinary shares of Skip Limited. Hop Limited commenced trading on 1st August 2014, and for the 8-month period ended 31st December March 15, has taxable total profits of 63,000.
So that's Hop Limited. So it's a subsidiary. They own 80% of Hop Limited and 60% of Skip Limited. What this tells me is 80% for group loss relief, you need a holding of 75%. So therefore, you won't be able to offset anything against the Skip Limited profits, which is 56,000 for the year ended 31st March 2015. Okay. And here we'll sort of need to do some pro rata, some apportionment, because we have an 8-month period. So we'll just need to think about that, and I'll leave that bit to you.
Okay.
Rates of corporation tax.
Jump, Hop, and Skip Limited have always paid corporation tax at the small
ignore
profit
that,
rate.
sorry.
Okay.
Yeah, we'll just say 19%. So you do 19%. So again, 15 marks. We got 10 going for the tax adjusted trading loss, which is all the discussions and the add backs disallowed we mentioned. And as you know, it's wholly and exclusively for trade purposes, which is the primary thoughts going through our head. Just remember, memorize, or just completely remember that any leasing costs on car emissions exceeding 110 grams per kilometer, only 85% is allowable. Therefore, you add back 15%. So 3-month period, it says what figure to start with, and you show 0 for any items which do not require adjustment.
Yeah.
And then B, let's discuss B together. Have a think about it, but we'll discuss them together.
Okay.
So it's a 10-mark question. I'll give you 1 second. In fact, if you can, B, I will do together. We'll just mention that shortly. But I just want you to think about in detail, as in try to answer I, because I just want to see what your thought process is, and also how you would present. So yeah, if you can actually answer the other two questions, the other two parts as well.
Okay.
So that's marks, and I'll give you 16 minutes. I'll check on you in 16 minutes.
Okay. Yeah.
And then we'll have some time then to discuss and go through.
Yeah.
Okay, so let's look at your computation to begin with, and we'll move on to that after we've got your computation. Okay, talk me through, please.
So we start off with 144,700, and then I add back the 8,100 depreciation, and then note 1 employees. The 3,400 is fine to deduct, so I did that 0. The pension contributions paid is also fine to deduct. The cost of the annual staff party is £150 per person limit, and this one's more than that. It goes to 187, so I added back the whole amount. And then the rest is allowable, so I just did 0 there.
Good, yeah.
And then the lease of the motor car is high emissions, 110 grams, so 85% is fine to deduct. So I added back the difference.
Exactly. So you could have done 1,200 times 15% as well.
Yeah.
Good.
A quick question on this: if it's less than 110 grams, is all of it fine to deduct?
Yeah, as in there's no add back, basically. Correct.
Okay, so it's only if it's 110, more than 110, then it's 85.
Yes, correct.
Okay. Employee, so accountancy is fine to deduct. legal fees regarding share capital added back, and then the renewal lease is fine to deduct, so I did 0 there.
Agreed. Good.
Were both these 0 in the end? Entertaining.
As in both are added back. Yes,
added
correct.
Back,
yeah. I'm happy with that. Yeah.
Okay. Yeah. Political donations added back, and then the balance is 0. It's all allowable.
Good.
And then I've got a total loss of that much, and then capital allowances. So it says here, I got a bit stuck here actually. It says here the main pool is 12,100, special rate pool 5,700, and then dispose of the car, I capped it at the original cost 9,300, and then disposal of the other car is 6,100. So main pool 6,000, and special rate pool is minus 3,600.
And then what do we have? You have a so you correctly put a balancing charge.
Yeah, so I charged all of it though, is that correct? Because the whole pool's gone.
Yeah, exactly. Yeah, the whole pool's gone. So you charge.
Okay. Yeah, so I did writing down allowance for this one at 18% at 3 months.
Yeah. So basically, if you're taking okay. So really and truly, technically, it's an allowance. So 270 will be add. So you have your allowance, so 270, and then you'll take off your balancing charge.
Yeah.
So then you'll have a balancing charge. Good. So you add your balancing charge. Excellent. Which technically reduces your loss.
Yeah. Was it correct here that I put 1,080, or is it supposed to be 270 here as well?
No, that's correct. Why? Because no, yeah, it should be 270.
270, right? Yeah.
270. If it was private, if it was a sole trader or partners within a partnership and there was some sort of private use and you're only taking the business element, you'd still have the full amount of the writing down allowance because the asset is still being depreciated at that amount, whether it's private use or not. The asset is still reducing in balance, right?
Yeah.
But then for your claim, you're only taking the business element. But here, there's no apportionment for business or private, so yeah, it'd be the 270. It'd be minus 270.
Yeah.
So it's 6,000 minus 270 on the left-hand side as well. That would be minus. And then you'll have your tax written down value. Yeah, that looks better. Good.
Okay.
And then you'll have and that will be positive. Yeah. No, yeah, that will be positive. Yeah. And then you'll have another line. I'll leave that for you to do, but at the bottom you'll have tax written down value carried forward, and you'll simply do the 6,000 less 270.
Yeah. Okay.
Excellent. Very good. That's comprehensive. State the main factor which will influence Jump Limited's choice of loss relief or group relief claim. What are your thoughts?
I think, was it something to do with if it will go above 1.5 million?
Yeah, so you can mention that. However, it's not relevant here, so I don't know if you actually get them up. But the basic comment you can make in what influences a loss relief claim is they would want to claim losses earlier rather than later.
Okay.
Any questions?
No. So what the earliest possible, whoever's got the earliest profits, you take it off theirs first?
Yeah, ideally, yeah. So again, that'll come back to the sort of information in the question. But in terms of answering the question would be, you'd want to claim losses earlier rather than later. Another thing would be if you have difference in corporation tax rates, you'd want to offset against the amount subject to higher taxes than the lower taxes. Does that make sense?
Yeah, but how would that work though? How would there be two rates?
Just no, it's not relevant for us because obviously everything's at 19%. But if there's ever a change in corporation tax rates and there's straddling of the periods,
Yeah.
That's when you'll sort of you'll use the higher rates. And then another thing you'd consider is you don't want to lose qualifying charitable donations. So you'll have a look at that as well, see what's happening, see what's losing what.
Okay.
Don't want to lose QCTs. Good. The next bit of the question was the maximum amount of trading loss which can be relieved against total profits for the year ended 31st March 2014, 7 months. Okay, so obviously we have a date issue here, but again, it's against his total profits. So yeah, so you can offset the full 42,400. Okay,
yeah.
But then with the 7 months, it'd be restricted to 5/12 because you can only go back 12 months, right? So you'll take the full 7 months, 42,400. You can use the loss against the full 7 months. And then the year ended 31st May 2014.
Yeah.
You add the two together, 78,600 plus 1,200.
Yeah. Okay.
And use them separately. But basically, you'll only be able to take 5/12 of those two amounts. Of the 79,800, you can only take 5/12.
Okay.
Because you only have to go back 12 months.
Okay. And then... Okay.
Okay. Again, for presentation purposes, it's not too clear how, like, what's happening there. Okay, so you added the two together, 79,800, 5 months. Okay, yeah, no, that's fine. That's fine.
Okay.
Yeah. And the final bit is, where's the question?
Advice. Sorry, I'll just bring it in.
Yeah, that's fine.
Yep.
Okay, the maximum amount of its trading loss, which can be surrendered as group relief. So we mentioned Skip Limited is not a 75% subsidiary, so you'll simply get half a mark for mentioning. None of the loss of Jump Limited can be surrendered to Skip Limited. And for Hop Limited, we will say the maximum amount that can be surrendered would be 3 months out of its 8-month period ended 31st March 2015, because it has to be coterminous, meaning it has to overlap. And we only have a 3-month period for Jump Limited, 3-month loss. So we can only take 3 out of the 8 months of £63,000 for Hop Limited.
Okay, so Hop Limited. Commenced trading on 1st of August 2014. Oh, okay, I see what I mean. So because it's a 3-month period here, so that would be 3/8, correct?
Correct. The 3 months are coterminous, which is Jan to March, 31st March. So you take the maximum you can take is 23,625.
Okay.
Let's leave it at that for today. Do you have any questions before we go?
No.
If you do, just we'll discuss the next session. I've just got a session starting now.